are starting a very important topic of financial accounting, FA. The topic is IAS 16, International Accounting Standard number 16. What is IAS 16 about? We are going to discuss today. IAS 16 deals with tangible non-current assets. Tangible non-current assets, yes, we all are surrounded by lots of assets: land, building, equipment, machine, chair, table, fan, air conditioner. Too many assets we have. So there is a need, there must be an IAS, International Accounting Standards, who deals with them, who let us know how to deal with tangible non-current assets. So what is the name of this IAS? The name of this IAS is Property, Plant, and Equipment. So IAS 16 is dealing with property, plant, and equipment. The name is property, plant, and equipment, but remember one thing: this IAS is dealing with all types of non-current assets. Don't think that it's only dealing with property, plant, and equipment. It's covering up all types of non-current assets like furniture, fixture, table, chair. Each and everything are falling under this IAS. So IAS 16 is telling us that whatever you have non-current asset, I am here to deal with. So we are asking now, hey IAS 16, tell us how to record non-current asset, how to deal with non-current assets. So IAS 16 is telling us the non-current asset, whenever you are buying an asset, you must record it at debit and credit. Okay, you must debit the asset because asset increases on debit side, while you are paying it cash or you are buying on credit is on other side. This entry we are discussing from our childhood, yani FA1, FA2. We already discussed the debits and credits, like asset increases on debit side while asset decreases on credit side. So whenever we are buying an asset, the asset is supposed to be debit. The question is, the problem is, the asset is debited on what? So IAS 16 is suggesting the asset must be debited on cost. So we are asking, hey IAS 16, what do you mean by cost? What is cost? So IAS 16 is telling us that cost means you take list price. List price means whenever we are going to buy any asset, there is a list price. List price means the price, the real price the supplier is offering. For example, you are going to buy a machine. Supplier is saying $100,000. Okay, $100,000. You will start bargaining or no? You will start negotiating or no? Definitely yes. So we are start negotiating with the price. So trade discount, any trade discount if available, supposed to be deducted from this price, and the answer will be known as invoice value. Okay, after we have invoice value, there is something new. There is something new now. The new thing is capital expenditure. Some of you might be aware of capital expenditure, but most of you might not be aware of the capital expense. So here I am going to explain you what are capital expenses. So be very careful. Capital expenses are those expenses which we are incurring while we are buying an asset. Capital expenditures are those expenses which we are incurring while buying the asset. Yani expenses relates to the purchase of asset. Okay, fine. And capital expenses are non-routine expenditures. Capital expenditures are, always remember, capital expenditures are non-routine in nature. They are non-routine expenses. Okay, now for example, you have a car. You are putting fuel in the car or no? So definitely yes. Without fuel, car cannot move. How we can run the car without fuel, without petrol, without diesel? So we are spending money on fuel now once, or we are refilling the car again and again. Sorry, it's again and again. Okay. Capital expenses, known routine, not the routine ones. Okay. So which means that fuel is a routine expense. Oh, okay. Fuel is a routine expense. So it cannot be a capital expenditure, because capital expenditure must be a known routine expense. Okay. So I'm writing here known routine in nature. Capital expense is an expense which is known routine in nature. Got my point? Okay. Now I'm giving you a story. Now I'm telling you a story. In this story, lots of expenses will be there. We will discuss. I will say the expense name. Okay, always a recording, but try. You say, you speak, you tell yourself that which expense sir is telling, I think it's like that, and then I will let you know. Do like that, okay? Now, the story is, assume Mr. Mudassir. We have a guy called Mr. Mudassir. Mr. Mudassir is buying Rolls Royce Ghost. Wow. Let's assume he is importing that car from England. Wow. He is importing Rolls Royce Ghost from England, and he is in Pakistan right now. The car is in England, he is in Pakistan. How the car will fly to Pakistan? Okay. First thing, sir, he have to pay the price of the car. Okay. He pays the price, it's the invoice value, he paid it, khalas, finish. Now the car is in England, he is in Pakistan. Now the car needs to come to the Pakistan. How the car will come to Pakistan? Mr. Mudassir is worried. So we are saying, Mr. Mudassir, don't worry, relax. We will hire a ship. We put your car in a container and your car will come to Pakistan, no problem. Tell me guys, the transportation cost of the car, the transportation, the sea transport, the vessel, the guy who is bringing the car from England to Pakistan, he will charge or no? Definitely yes. The cargo charges, the shipment charges, the shipping line charges. Think, is it one-time expense or is it a routine expense? Sir, one time. The car will come from England to Pakistan once only. So khalas, one-time expense. One-time expense means it's a capital expense. Okay. Transportation of a non-current asset is a capital expense, fine. Now the car is at Pakistan port, the car arrived. Now the problem is, he need to clear the car, he need to pay taxes, he need to pay charges, he need to pay custom duty, he need to pay lots and lots of formal expenses which are imposed by the government of Pakistan. Okay. The duty, the custom duty, the stamp duty, this duty, that duty, taxes, VAT, whatever. All the expenses, port charges, all the expenses which he is incurring now. Tell me guys, one time or again and again he have to pay the clearing charges? Sir, one time. So, one time expense is, what is? Capital expense. Khalas, fine, finish. Now the car is with Mr. Mudassir. But the car don't have engine oil, the car don't have fuel, so the car cannot run on the road. So what Mr. Mudassir did, he hired a recovery truck and he loaded the car on the recovery truck and taking it to the fuel station, to the mechanic shop. The guy who is transporting the car on the recovery truck is not free, bhai. He is asking the money. Mr. Mudassir pays him some money. The transportation again, transportation, recovery truck charges again. Tell me, one time again and again. So sir, it's one time expense. One time expense means it's a capital expense. Now the car is at garage, car is at fuel station, car is at mechanic. Mechanic is pouring the fuel. He's putting the engine oil, brake oil, this oil, that oil. The car is ready. Start, finish, very nice. But mechanic is charging money. Engine oil, fuel, any other things he put. Brake oil, guys, think now. Fuel, engine oil, brake oil, one-time expense, or is gonna be incurred again and again. Frequency of fuel might be daily, might be an alternate day. If Mr. Mudassir is not using car very much, might be a week. Engine oil every 5,000 or 10,000 kilometers. Okay. Brake oil, same thing, every 10,000, 20,000 kilometers. Gear oil might be 20,000 kilometers. Again and again, again and again, after a fixed interval, fuel, diesel, this, that, this oil, that oil need to be refilled, need to be changed. So it's a recurring expense or it's a one-time expense? What do you think, guys? It's a recurring expense, so it cannot be a capital expense. Why? Because the capital expense must be non-routine once, but fuel, engine oil, diesel oil, this oil, that oil, again and again, recurring. It cannot be a capital expense. So, sir, is there any name for routine expenses? So yes, any expenses which are routine expenses are known as revenue expenses. Capital expense, one time. Revenue expenses, again and again, again and again. After a regular interval, if we are incurring any expense, it's a revenue expense. Got my point? Now the car is on the road and Mr. Mudassir, he have Rolls Royals. Mr. Mudassir is owner of Rolls Royals. He's not a small guy, he's a big shot, mashallah. So he is having a chauffeur, a driver who is driving the car. Okay, Uncle Chauffeur, monthly salary. What do you think, guys? The salary of Uncle Chauffeur, the salary of the driver, capital expense or revenue expense? Okay, revenue expense. Why? Because, sir, Uncle Chauffeur, every month we have to pay him, or if we hired him on occasional basis, we have to pay him wages. But wage or a salary is a reoccurring again and again. So it's a revenue expense, not a capital expense. So in this example, we discuss lots of capital expenses. Capital expenses, one-timer. Revenue expenses, routine, again and again and again and again. So you must remember that, because sometimes the examiner is asking you this thing. Now I am sharing a question from Study Hub, ACCA official Study Hub. Let's discuss an example question from there, and this topic of capital expense and revenue expense will be covered up, inshallah. So let me paste the question. Okay. Our company is in the business of manufacturing carpets. The management of R has decided to purchase and install a new carpet weaving machine. Okay, they are buying a new machine. Buying a new machine is a purchase of non-current asset, guys. Remember one thing, buying an asset is also a capital expense. Okay, yani the payment for Rolls Royals is a capital expense. Transportation of Rolls Royals was the capital expense. So purchase of a machine is again, why is a capital expense? Because purchase of equipment, purchase of machine, purchase of car, purchase of computer, we are not doing it again and again. We are incurring that expense once. And the asset do have its own life. After the end of life, we are replacing it, but it's for a long term. So purchase of a non-current asset itself is a capital expense. So 150,000 again, it's a capital expense from this example. Then, as a result, our company incurred similar expenses that need to be accounted for as a part of the cost. He is asking you the cost. I told you above, we take the invoice value, add up all the capital expenses. Invoice value I took it, which is 150. Now capital expenses we are searching. We have 1, 2, 3 types of expenses. Number 1, 5,000 to install and set up the machine prior to it being used. Okay, installation, guys. We have a machine, we need to install it. Some machines in the factories need drilling so the building cannot shake. Otherwise, building starts shaking. So, installation, testing. What do you think? Every month, every week, every year we are doing to install the machine, or it's once? What? It's once. So, the expense which incurred once, non-routine in nature, is a capital expense, so need to be added in the cost of asset. Capital expense will be added in the cost of asset. Next one, insurance of machine. Insurance of machine. Be careful, guys. Insurance. What's they wrote here? Insurance. Now, what is insurance? Insurance, if we have insurance, like if we are living in Dubai, we have to insure our cars, we have to insure our buildings, we have to insure lots of things. Health insurance is also there. Tell me, you are buying insurance and you are paying it finish? Or you have to pay every year, or you have to renew your insurance every year? Like in Dubai, if we have a car, every year we need to renew the Ecademy. We need to renew the registration certificate. We need to renew the registration card of the car. And when we are renewing the card of the car, registration card of the car, the insurance need to be renewed. Any insurance of assets, insurance of car is a routine expense. Every year is a reoccurring expense. So expense which is reoccurring in nature is a revenue expense, not a capital expense. So khalli walli revenue expense. Revenue expense cannot be part of the cost of asset. Only capital expense can be part of the cost of the asset. Next one is training. We are not paying the salary, not like chauffeur salary. Here is the training to the staff, so they know how to use the machine. Tell me, guys, the training will be once or every time? Normal training in the offices, normal training in the companies I'm not talking about that one. I'm talking about the training, the specific training, what is written here, which enables them to learn how to use the machine. That is a specific training, no? Specific training is one-time expense or again and again. Obviously, it's a one-time expense. So one-time expense need to be added in the cost of the asset, and very golden number, unique number is coming up. That is the cost of the machine. Machine needs to be debited with this one. And if they bought it for cash, we can credit the cash. If they buy on credit, instead of crediting the cash, I will credit the payable. So that's the concept of cost of asset. IAS 16 is saying you take the list price, deduct the trade discount, and add up all the subsequent expenses. Subsequent expenses is another name of capital expenses. You must add all the capital expenses in the cost of asset, and then whatever answer you will get, it will be known as the cost of asset, and your asset will be debited. The asset will be recorded at that amount. Any original cost of asset, deduct trade discount, and add up all the capital expenses, and we will have the cost of asset. That's it for this lecture, and in next lecture, inshallah, we will learn learn depreciation and other things which IAS 16 is referring us, or which are in our syllabus. Till then,